Hi there, traders. This is Brad Gilbert with today's trading action. All right, as we move out of the North American Thursday, coming into Friday's markets, the dollar surprised me a little bit, and the data just shows me that the market is really starved of oxygen. And what I mean by that is fresh momentum, right? This happens in the third and fourth week of the month where there's no major numbers. Then we get one of them and the market sort of move. And this is because the traders are trying to feed off any sort of momentum. And the US GDP numbers came out slightly stronger. Okay. And that sort of saw the dollar continue that little bit of a retracement. So I'm not alarmed by this. And I actually haven't traded this down move. I'm waiting for the dollar to start coming back down. So euro giving up some ground, sterling, Aussie, Kiwi. To me, this is good, right? I don't do a lot of trading in the fourth week of the month, but what this does is it cleans out all the stale short US dollar positions and long euro, sterling, Aussie, Kiwi positions, right? Cleans them out. So it's like fresh regeneration ready to go. Dollar Swiss clean out of stops there. Dollar yen also. And dollar CAD continues to sort of hold that down move, especially with oil back at 76 bucks. So like, what does that mean? I mean, if you're caught up in that, by all means, it's a little bit disappointing, I got to say. But you know what? The key aspect of what the market is looking at, right? And you know, this stronger GDP number, they're sort of saying it scales back the Fed, chance of a Fed 0.5% cut at their next meeting. I tell you what, the derivatives market has hardly moved, right? So this tells me that the market was sort of waiting for something to hit. We got stronger US GDP numbers. And on top of that, here's the numbers here. We got weaker German CPI numbers, right? So that was a bit of a down euro. And then you've got a strong dollar there as well. So euro, natural trade to the downside. And it's one of those things that you can just match up if you are in front of the screens and being consistent with your trading. So just keep an eye on that. Those initial jobless claims numbers, okay, nothing to see there. But it was the GDP numbers, which the market thinks has, wound back the 50 basis points cut. I'm telling you, it hasn't happened yet. So to me, the dollar, this is just a little clean out, like end of month clean out of stale positions. And then we should start to see the dollar start to drift lower, especially next week, right? The first week of the month, US non-farm payrolls, especially with a bunch of other big high impacting numbers that will sort out once and for all, are the Fed cutting by 0.25 or 0.5. That's where we're at. Okay, so, and just looking at today's, where momentum and direction is going to come from today, you've got some Japanese numbers here. Don't hold your breath there. I've sort of switched off Japanese numbers about 15 years ago, right? So it's a bit of a shame, but that's just because the economy is so muted. Now, we do have a few numbers out of Europe, German. I keep an eye on these German numbers, right? If there's we start to see, when we saw inflation a little bit lower in Germany, Germany is the anchor point for Europe, right? So if we start to see weaker euro retail sales, unemployment starts to shift, you got the Swissy COP indicator in there as well, then this could see euro have a bit more of a move to the downside. Don't forget the ECB are due to cut rates as well at their next meeting. UK, you've got some mortgage stuff. Yeah, sometimes that can sort of impact, but once again, I'm not really holding my breath. We've got some flash inflation numbers out of the Eurozone, which is probably worth having a look at, considering we got weaker German numbers yesterday. And then you come down to a number that gets a lot of interest these days. Well, my calendar's just scrolled back up. Is the PCE price index out of the US, right? This number here, it is an inflation number. So you got to keep an eye on it. Personal income, PCE price index, month on month, year on year. These are the numbers to be sort of keeping an eye on. You've also got Canadian GDP numbers and the University of Michigan sentiment numbers there too. But this is the number that you'll see all over the news, right? They like to talk about it because it is an inflation number. They call it one of the Fed's great, favorite numbers to look at. Now, if you don't have Metastock, don't forget to come back to the site. You can actually get the interest rate probabilities, and then you can start to really piece it together on the calendar where these opportunities are, right? And see the potential impact. So we've got the nationwide house prices out of the UK, the COF indicator, and there's not many numbers that come out of Switzerland, so make sure you pay attention to that. German unemployment numbers, definitely worth a Bo Peep. And if I just scroll over to the next page, you come down through the PCE price index numbers. These are the numbers here that you should really be sort of focusing on. You've got the range here to keep an eye on as well. This just gives you full preparation for the opportunities, right? And connecting these interest rate probabilities with the calendar, that's where the magic comes from, right? If you've got any questions, jump on the Discord in the chat there. You can get some more clues as to what's going on through the market. And that's pretty much it, right? It's one of those funny ones, right? We knew Thursday, Friday was where the key data was coming out. I've sort of been sitting back just watching everything sort of just unravel. And we've seen, you can see how the trend lines, for those traders who aren't like used to seeing how trend lines work, this is a textbook example, right? You see the initial breakdown. Let me just clear that text. A little breakthrough, comes back, retests and goes down, hits the next support line, grinds through that, breaks back down, and then boom to the downside, really. So the next level of support is down here at 110, right? That would be a really nice clean out to me. I'm still like frothing to get short dollars, long euro. Well, actually, now that the German and euro numbers are turning a bit sour, but long these other instruments, right? Just short dollars and trying to find the best instrument to go long against the dollar is what I'm sort of looking for, especially as we go into next week. You know, fresh week, fresh month, fresh data. Can't get more exciting. All right, guys. So just keep it real. PCE price index, probably the key for the dollar today. You know, this and why it comes back into play. If I just get the calendar back up, because it comes down to this Federal Reserve meeting, right? Next meeting, 18th of September, a cut 0.25, 67%. This part of it here is what the PCE price index is about. If that PCE price index comes in really weak, well, the chance of a 0.5% cut is going to increase. And that's where the dollar will shift lower, and you'll see a correction in those moves we've seen the last day or so. All right. If the numbers come out strong, well, the chance of a 0.5 cut is out the window. You probably see the dollar. Well, it's probably already rallied as far as it's going to go, because we are going to get a 0.25 cut anyway. All right, guys, have a good one. All the best. Cheerio.